Hello and welcome to Benefits Weekly. Our topic this week, it's a bit of a deep cut, Section 213D expenses. What are they anyways? And frankly, Eric, who cares? I'm going to flip it to you because we've been talking a lot lately about flexible spending accounts and these things. And, you kind of surprised me the other day when I mentioned, I was like, oh yeah, the list, the 213D list. And then you educated me and we figured we should pass it forward. So tell me more, buddy.
Yeah, so it's kind of funny. One of my favorite memes over the last few years is Bernie Sanders when he's, at Joe Biden's inauguration, and they've got the words "This could have been an email." I kind of feel that way about this week's topic. The message is actually fairly short and sweet, but just like with an inauguration, it doesn't mean it's not important. And so I thought this was a good topic to tackle simply because you, like me, had never really looked up Section 213D, although it sort of rolls off our tongue. I think in the insurance industry, whether we're benefit advisors or HR professionals, I think a lot of times when we're talking about tax advantaged accounts like FSAs, HSAs, HRAs, we will just, instinctively say this can be used for any Section 213D eligible expense, as if everybody knows what that is. And so, I think that there's an assumption that if you go to Internal Revenue Code Section 213D, you're going to find a big long list of eligible expenses. And the fact is that is not the case at all. If you Google Section 213D, what you find is there's basically just a definition. This is a short version of it, but it basically says the term medical care means amounts paid for the diagnosis, cure, mitigation, treatment, or prevention of disease, or for the purpose of affecting any structure or function of the body. That's a pretty broad definition. And essentially what the IRS is saying is, we're not going to tell you what an eligible expense is. We're going to describe it and you figure it out. And I think that's something, like I said, a lot of people in the industry don't realize, and certainly a lot of employees who are eligible for these sorts of tax advantaged accounts probably don't realize.
So that's helpful, but I'm also thinking there is a list of some sort out there that I feel like, a couple years ago it was a big deal because they added over-the-counter drugs to it and said those could be on there, or maybe menstrual products or things like that. And I'm trying to reconcile, like, what is the list that might be out there if it's not the 213D list of expenses, which is the shorthand we've all adopted in the benefits space.
Right. Well, I think a lot of third-party administrators do have a list, but it is a partial list. It's a sample list where they will include some of those items that are now eligible expenses again. But I think what you're thinking about probably is publication 502 from the Internal Revenue Service. That publication actually is, it's funny because we refer to it a lot when we're trying to guide employees, as to what might be an eligible expense. But the fact is that publication is really for people who have a lot of medical expenses, more than 7.5% of their adjusted gross income, and they're going to itemize their taxes and deduct those expenses. And so it does give a lot of examples in that publication. But the funny thing is, if you look at the beginning of it, it also gives a definition that's similar to what you see here as to what an eligible medical expense might be. So it is not an exhaustive list either.
Interesting. So publication 502 has become a reference point maybe for a lot of these TPAs out there or folks that are trying to figure out what might qualify under FSA, HRA, or HSA. Oof, that's a lot. But in fact, it's not like some definitive list. And I think maybe, I'm just kind of extrapolating here a little bit, but, in life, we all want black and white. We want clear answers. Yes, no. Fortunately or unfortunately, when we're dealing with employee benefits, we're often wading into the gray.
Right.
And perhaps what we've all done is clung onto this publication 502 list as the black and white answer when that's maybe not really the purpose of it. That's kind of what I'm hearing from you.
Yeah, and exactly. And I think, I don't want to make this more than what it is. I mean, the reality is the lists that a third party administrator might provide, the sample list, the ones that are floating around out there, those are pretty good. They do give people an idea of the sorts of things that might be eligible expenses, so they can take advantage of them. Section 213D, it actually goes into a little more detail on some of those expenses. Like, for instance, if you have to travel to receive medical care, then there is a mileage reimbursement rate. You might be able to get your lodging reimbursed through a tax advantaged account, and it gives some limits. So certainly, 502, 213D, they're important for some clarifications. The truth is, it's more important, I think, for HR professionals, for employee benefits professionals. As we're doing enrollment meetings, we need to be clear and recognize that employees, when they're sitting there in that meeting and we say, hey, this account can be used for any Section 213D expense, they have no clue what we're talking about.
Yeah.
And in the same way that you and I and probably most other agents have never looked this up, they're not going to go look it up. So what I would suggest is, just from a communication standpoint, if we could say, you know, here's a sample list of some of the things that you can use your account for, but the reality is you can actually use it for any Section 213D eligible expense. And what that means is, and put the definition up there, spend 30 or 60 seconds on it, and now it will make sense to employees as opposed to it being a point of confusion.
That's really great advice. And I think that's the so what, along with, at the end of the day, the TPAs or wherever you're working with, they've got an army of people, or maybe now it's an army of AI bots that are
Right.
checking things to see if they're eligible and saying, approve or deny. And the reality is there might be occasions on the back end for more nuance where something's immediately approved, or perhaps more importantly, immediately denied because it's not on that 502 list when actually maybe it should have been approved. And so I think the other message we want to maybe share with folks is, if you really have something that you feel like it should qualify based on that 213 definition, have a conversation, follow up, and maybe it does, in fact, qualify for reimbursement under one of these
Good
programs.
point. There's always exceptions, and if you can make the case, then you may be able to claim that as a eligible expense.
Well, with that, we'll leave it there. Thank you, everyone, for joining us this week at Benefits Weekly. As always, if you found it helpful, the best thing you can do is share it with a friend.
Thanks, everyone.